You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster GIOVINAZZI from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. That rockingest of tunes means it is time to rock out once again with the Option Block, everyone's favorite bi-weekly source for all things options related. A little bit of options wit, some wisdom, some unusual activity, some analysis, some education. Throw in a bunch of your questions. Stir it all together. You got the tasty, delicious chowder, to say it back in the New England parlance. That is the Option Block. My name is Mark Long. I'll be your host, your guide, your maitre d', not just for this program, but for TWIFO later on today. A whole bunch of other fun stuff popping off here on the network. Hopefully you're liking what you're hearing on the network. I'm seeing the numbers, so a lot of you are coming. I'm hoping you're liking it. If so many of you are coming in. If you didn't like it, I would be surprised. But if you are liking what you're hearing, make sure you leave a review, not just for this show, but for the full network, pretty much wherever you get these programs. Could be Apple Podcasts, could be Google Podcasts, could be Spotify, could be wherever you get it. And make sure, of course, keep those questions and comments coming. We do love to hear from you guys. Let's see who else we are hearing from on the old program today. First, let's go out to the quiet and tranquil hamlet known as St. Charles, where we are joined once again by the uncleest of Mikes, Mr. Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to the program, sir.
Always happy to be here, even on a day like today. The Option Block is a sense of calm in a chaotic market.
Yes, on this Uncle Mikeest of days out there in the marketplace. If there ever was an Uncle Mike Day, this is certainly it. All right. And also joining us, if ever there was a Rock Lobster Day, to be truthful, this is probably it. We are joined once again by the rockingest of lobsters, Mr. Andrew GIOVINAZZI from OptionPit.com, by way of Carmen Lion Capital. Not sure if he's going to move to Texas, too, one of these days. I guess we'll find out. Mr. Rock Lobster, are you abandoning the New England compound for a Southern compound, sir?
I think that would be premature. I don't see you as a Texan. I don't see you with the hat and the Spurs and all the good stuff. I did spend 9 months in Houston with Acumen, and, it was a nice town, but it is, people that live in Houston come to Maine to vacation, so that was pretty much all I needed to hear at that point.
Well, there you go. A little bit of a Houstonite there as well. He was quite the itinerant. Quite the migrant before he settled down in the compound. As we settle down into our first segment, it is time for the Trading Block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody. Welcome to the Trading Block. This is indeed the portion of the program where we break down what the heck is trading. And a heck of a lot is trading right now. Most of it in the red side of the spectrum. We've been saying it before. The market's been going up, going up, going up. When it goes down hard of late, and seemingly on kind of little news and with very little warning. And that's pretty much what we've been saying for a while here on the show. In fact, I think Uncle Mike said that exact same thing the last couple episodes. Watch out below. When it comes hard and without a lot of notice. And it's coming hard today to the tune of most of the major indices well into the red. The S&P is once again the Goldilocks, off a paltry. It was a little over 2% right before the show. Now it's off about 3.6% to the dark side. So looking pretty rough down there. The Dow, a bit of a laggard there, only off a meager 2.75%. And the NASDAQ just getting annihilated, off 4.99%, just about to tick 5% to the dark side, off 601 handles in the dark side land out there. Oh, how the mighty are falling, at least right now. Of course, you say that, but they're still up orders of magnitude from where we were earlier this year. Small caps also kind of playing the laggard today, which is kind of interesting. We'll get into this more on TWIFO in a little bit. We'll also have Tim McCourt from CME joining us there as well to break down all the hot stuff going on the micro futures. You guys are liking the micro options. That new NASDAQ CME vol product, yeah, we're going to get into that in a little bit as well. The IWM off over 2.75%, a little bit north, about 2.85% right now. So small caps surprisingly playing the laggard out there, which is not their usual role. Usually small caps like a little bit of leading the market to the downside or to the upside. And we're seeing our old friend VIX coming into showtime. It was at about a 29, puts it up about 4 handles. It's now north of the 30 handle. It's closing in on 32, about 31 3/4. That puts it up, about 6 3/4 or so points from last show. So a little bit of juice out there in ye old VIX cash. Our old friend VVIX, which is the vol of vol, that's up. That's moving because VIX is moving. The vol of vol at about a 130.25 actually. It was at about 125.5 coming at the showtime. That puts it up about 13 handles, and now it's gained another, about almost 5 handles. So it's up about 18 points from where it was last show. We always say that 120 level is a barometer. Pay attention to. Well, we blew through that up to 130 right now. And VXX was still shy of the 30 handle prior to showtime. It was 29.25, up 4 points. Let's see if that's the case now. Oh, no, just broke it. 30.25. So it's up 5 handles exactly from our last show. So I think the short summation is wow. A longer summation is this is one of those days where it's kind of hard to parse what really is causing the worm to turn out here. Some folks looking at, maybe the stimulus deadlock, but that's not new news. It's not a new development out there. This is one of those days where I lean on my more sellers than buyers trope out there. Maybe the public got a whiff of this study that came out of a presentation from the Federal Reserve Bank of Kansas City's annual conference. Pretty dire stuff. Maybe this is what's spooking everybody. They said the coronavirus pandemic is going to leave a legacy of fear and uncertainty that will hold back the economy for decades, saying this is likely to dampen risk-taking and economic output for decades to come because of the, quote, perceived probability of an extreme negative shock in the future. This title, the study titled appropriately enough, Scarring Body and Mind, the long-term belief scarring effects of COVID-19, went out and compared this to the Great Recession and other big shocks like this. And they say businesses going forward are going to make future decisions with the risk of another pandemic in mind. That's going to greatly increase their risk aversion out there. They said the world is riskier and more unpredictable than we thought. The shocks that hit one sector may hit another tomorrow, and that's unforeseeable. It's forcing many small businesses to close. The people who run those, obviously, probably not going to get back into the game. So that's probably a loss of economic activity there. Top economists believe as much as half of the temporary job losses and furloughs could become permanent. Thousands of businesses could go bankrupt. Moody's doesn't think we're going to pick up in the economy until late 2023. The Fed paper, this one goes even beyond this, looks at what they call more nuanced toll caused by the altered perceptions and reduced investment years and decades for now. They're saying, for example, certain types of capital, like businesses and equipment, are becoming obsolete, depreciating their value because they're sitting empty. And so that's just depreciating them faster. In a normal economic cycle, they'd replace those with other assets that would generate even more economic output. But in this case, the caution over and the risk aversion as a result of the pandemic will stop that. And so we're having assets depreciating, no new assets coming in to replace them. And also as a result of that capital depreciating, we need fewer workers to come in and handle it. So there's fewer jobs involved. So that means they looked at the long-term scarring effects of events over the past 70 years, such as the oil crisis and the Great Recession, and they found that the long run, what they think, and again, this is all very difficult to model and quantify, but so take it with a big grain of salt, but the long run effects are nearly 10 times the projected 6 to 9% decline in U.S. GDP this year, the study says. And let's see, depending on whether they have one or more, likely multiple lockdowns, the lasting effects of this crisis are likely to reduce economic output over 70 years, 7-0, by the equivalent of 57 to 90% of a year's worth of GDP. This is worse than the Great Recession, more sudden, and part of the suddenness is that shock value. So maybe this is what's scaring the hell out of everybody today. Either way, we're seeing a lot of blood red on the street. It's a blood red day, so let's start with that bloodiest of minded cynics over there in the far northeast. Yes, Mr. Rock Lobster, sir, this is the day that has you written all over it. We're moving through zones in VIX willy-nilly. What is lighting up your tape today, sir?
Well, VIX is 32. You know what's funny? We barely get out of zone 4 for literally a couple of days. The market really just goes straight up, and we go right back into zone 2 again, zone 4 again. So just vol is not going away. I think this report by the Fed is the dumbest, most ridiculous thing I've ever heard. But
I knew you would love this one. I knew you'd love a prognostication for 70 years of economic damage.
It's like, oh, really? Like that's your big idea at this point? Like that's stupid, you know? I mean, that's actually totally ignoring all the data from around the globe in Asia and everywhere. It's like, it's silly. Yes, this is a pain in the butt, you know, like I don't even want to get into it, but I think it's a great thing to post if you want to make the election a little bit more competitive. That's all I'm going to say. So, you know, what do we have out of this? I mean, people freaked out. You know, you have the market at an all-time high and the Fed says everything is going to suck forever. So that's probably not going to, it's not going to bode well. So, you know, we did see vol up to 32. You know, SPX is down, 3.5%. The Qs are down 4%. And also, like, take a little, you know what's funny is once Tesla split, the stock being down doesn't look as bad anymore, right? Like, you almost barely notice it's down, but I think Tesla is down $100 or $120.
It's over $100, yeah.
In 3 days, right? Ever since he did that secondary where he raised another $5 billion. So again, Elon Musk continues to be probably the smartest guy on the planet.
Yeah, dumping that stock at that all-time high. That's hard to fault him for that one. Yeah,
like that guy plays a shell game that he's playing a shell game nobody else is playing. He's pretty awesome, I have to say. I'm glad he's an entrepreneur. But as far as it's down 100, but actually that's like $500, right? Split adjusted. So if Tesla was down $500 in a couple of days, it would make headlines. But it's only down 20 today, 20 yesterday, 30. So strategically, you think the headlines aren't as bad, except everybody's realizing now what the split means. That every move is worth 5 times as much. So I think the sell-off was healthy. If we want to go higher, we generally need to sell off. So, we're selling off from all-time highs. So I don't know. I don't think it's a terrible thing. But is economic activity reduced? Yeah, it's reduced in the cities. It's reduced all over the place. And I think it also might be maybe from the Fed's point of view, like everybody's got to get their heads out, and get back to work because, we have to have some sort of normalcy here. I think, all these things have opened up. Whatever spike in coronavirus has went right back down again. It's happened time and time again now. So it's like, I think the Fed might be also putting a little shot over everybody's bow, like, wake up, everybody, wake up. I think it's important that, people do wake up and see, what's going on. So anyway, I think, is the vol warranted? Sure. Yeah. The market's down 3%, NASDAQ's down 5%. But, I think the Fed is doing a pretty good job considering about what they've had, how much they've enabled over the last 10 years, to be honest, at least the last 12 years. If you look at the federal debt, it's like, it's so, I think there has to be a time when the valve gets shut off, and a hard shut off is going to be painful. It'd probably be painful for the stock market. Whether it's painful for the stock market before the election or after is a difference, I think. So we'll see how it all plays out. You'd rather have the smoke blow off now and, instead of right to the election, because that could be somewhat effective. But remember, like with the financial crisis, kind of what happened in October 2008, McCain was kind of leading in the polls, and all of a sudden the Republicans look hapless. And to be quite honest, McCain looked hapless dealing with the financial crisis stuff. Obama did look better, understood the TARP thing better. I give him credit there. He was on it faster, although he took a lot of grief from the left for it, but it was probably one of the best things he did. But that matters coming into the election. So better to have a little blow off in September than to have a blow off in late October. So, and quite frankly, the futures have been bid looking for something. So that's where we find ourselves. I'll leave it to the happiest bull in the room, Mr. TOSAW.
Before we get there, you invoked Tesla, so now we are legally obligated to discuss them. And Tesla is selling off, what are they off? 34 handles right now. So they had a 5X split. So you're talking 170 points worth of pre-split sell-off out here. So they're threatening to break the 400 handle right now, Mr. Rock Lobster, at about 413. So who knows? By the end of the show, they could already have broken that, which got me thinking, what are they pricing in for a 50% sell-off in this name? Let's go all the way out to the end of the year. Let's go to DEADLOCK, and let's go the 200 strike put. What the hell do you think that is trading for right now? So we actually, just for fun, put that out to our audience, a little pop quiz. We're going to rely on the honor system. No cheating. Don't go to your brokerage platform. Use your gut. What does your gut tell you the December $200, roughly 50% out of the money put, is trading for right now? Because we're nice, we made it a multiple choice quiz for you because it's Twitter. Got to do that. So we gave you 4 choices. The $1 to $3 range. I'll give you a hint. Spoiler alert, it's beyond $1. You might think it's 74 cents. Nope. It's beyond $1. It's $1 to $3, $3 to $6, $7 to $9, or north of $9. Mr. Rock Lobster, would you care to hazard a guess on our poll, sir?
Oh, the 200 puts in Tesla to December?
Yes.
Yeah, over $9. Just pick a high number.
Just buy it all. Why not? $47, buy them. What the hell? Interesting. Well, let's turn now to Uncle Mike. Uncle Mike, sir, if you have a guess in our poll, have at it. And then B, what is your calming, salving, optimistic note on this blood red day, sir?
I'll agree with the Rock Lobster for the guess because I did not cheat. I'm very honorable in these polls. So in terms of today, I got bunch of stuff going on today. So I've been kind of trailing this market by selling put spreads over the course of the last couple of weeks. And so have not had the typical amount of deltas that I usually have on. But yesterday, just based on the market going higher, I actually made a move that increased my deltas, but lessened my risk monetarily, if that makes any sense. So to give you an idea of it, I've been selling vertical put spreads and just been taking profits the last few weeks, like anyone who's been selling vertical put spreads probably has been doing. But yesterday I wanted to up my delta a little bit, but lower my risk. So I traded it. So I just closed my put spread for a profit and got into a butterfly with more deltas, but ultimate less monetary risk. In that if the market were to stay about the same or go down a little bit, it was a bullish butterfly, by the way, then I'd be wrong. I'd be in bad shape because I was giving up some time value. If the market were to go higher, I would have benefited more. But if the market were to go lower, right now I'm probably in a similar spot. I'm a little bit worse off, but not much. A little bit worse off than had I stayed with the put spread that I got out of yesterday. But right now, I don't have to make that awful decision or be in that awful spot of, should I roll down? Should I do this? Should I do the other? Just because of the fact that the most I can lose is the debit of the trade. So I like bragging about losses on this show because of the fact that it makes things real. It makes it so that you're trying to manage risk and trying to do the right things for your own money and for your client's money in my case. So that's kind of where I'm at right now. And then the other thing I was able to do with the market going down like it is today, my first bit of risk management is I rolled up the long call to take a little bit off the table as we started to go down this morning, and then we kept going down even more. I was able to close out the short call spread on the top side. So now I'm just in a good old-fashioned call spread to where if we just come back a portion, if we're just down a little bit by the end of the day, I could end up being profitable on the day, which is kind of scary, but it does show you the magic of options. But if we don't, I have a limited risk on the table, so I'm not necessarily fearful right now in my aggressive strategy of another 1,000 point, or I'm sorry, of another, excuse me, of another 100 points going down in the S&P. I'm not really fearful of that right now. Don't get me wrong, I'd definitely be on the losing end, but that's not what concerns me the most. My concern right now is that if we stay still over the course of the next couple of weeks, then I'd get burned on time decay, which, quite honestly, I don't think we're going to stay still for the next couple of weeks now when we have a 3.5% downtick on the market in one day. Also, since you started talking, when Mark and Andrew have been talking, we actually have rallied almost 20 points in that time frame in the S&P 500. So, when something like that happens, when we can just rally 20 points and have it not be a big deal, on other shows we'd probably be looking at our screens and saying, what was the news? What happened on that? But on a day like today, that's really not a big deal. So it can be a very exciting market. Now, the next thing that I want to talk about, we have an election this year, as we all know. And from a political standpoint, once again, I'm not trying to comment politically on this show, but just as an outsider viewing things, I think that Donald Trump did an ingenious move earlier this week from a political standpoint. His battleground states are states like Michigan, Ohio, Wisconsin. And so right now, one thing that's really not happening this fall, or as of the time being, is Big Ten football. Of the Power Five conferences, which are the five biggest conferences in college football, the ones that you see going to the bowl games, the Big Ten, the ACC, the SEC, the Pac-12, the Big 12, those are the big guys, meaning the ones that have all the big TV money and that type of thing. But right now, the Big Ten isn't playing, and they voted not to play because of coronavirus. And so the other three of them, as did the Pac-12, the schools on the West Coast. So the SEC, the ACC, three of the five conferences in the Big 12 have decided that they're still going to play. So that's kind of upset a lot of people in Big Ten states. Now, maybe not so much Illinois, because our two Big Ten schools in Illinois really aren't that good, quite honestly. But it kind of upset people in Michigan, Ohio, and Wisconsin, because there's a lot of people that want it. The players are almost unanimous in that they want to play, and they're all adults, so they kind of feel that they were being oppressed, so to speak, because of the fact that they're all adults. They can make their decisions, but the school president said, no, you can't. So with that, President Trump met with the commissioner of the Big Ten a few days ago, and he made the tweet that it's on the 1 yard line, and it looks like that the Big Ten might get to play this fall. So with that being said, what's going to happen, let's say the Big Ten does get to play, Trump then can go to those states in Michigan, Ohio, and Wisconsin and say, I saved your season this fall. And as crazy as college football fans are, if you don't think that's going to have an effect on voting, then you are crazy. The other thing that I want to note in terms of that being an ingenious political move, Trump knows that states like California, Oregon, and Washington, the Pac-12 states who aren't playing, he's not going to win those states. And so with that, it means that I don't think he really cares that the Pac-12 isn't playing football. But as a concerned football fan, Mr. President, I would, because I'm sure he listens to this show, I would encourage you to meet with the Pac-12 as well, just to help college football. But with that, he's not making an effort with the Pac-12 because I think he kind of has an understanding that those states out west really aren't a major decision. So with that, if we do get college football in the Midwest again, that's going to be a huge thing for local economies. We talked about it on the show before, just with all the hundreds of thousands of people that go to games, that do things like that, or even if they don't go to the games, it's still going to be watched. There's going to be viewing parties and things like that. So with that, college football, or the Big Ten, kind of looks stupid right now in the way that they handled the whole situation. The other thing is that nationwide, a lot of high schools are playing football at this point. Not Illinois, but a lot of schools throughout the country are. And a lot of their numbers in COVID cases are actually going down. And I think the reason is that when you have a drill sergeant type football coach that is actually telling you that you guys stay in, you social distance, he's going to have a lot more influence than a teacher doing it, than a politician doing it, because the coach isn't going to want to mess up his football season. So anyway, with that, that's what's happening right now. And from the political standpoint, I think if the Big Ten does get football back, which it looks like they're going to at some point, that is going to be big political points for Trump. Once again, not trying to be political, trade accordingly based on that information.
The Uncle Mike College Football Indicator. Gotta love it. Hit him up over there at stcharleswealth.com if you too want to discuss the impact of college football on the political season. Speaking of impacts, all this volatility of late has been impacting the options market. The numbers hot off the presses from our friends over there at OCC for exactly how much. Remember, we just said June and July were the number 1 and number 3 overall volume leaders in the history of the options market. Well, we got a new number 3 now, and it's August, bumping July down the totem pole a little bit. August 2020 total volume, 615.9 million contracts. That's the third highest month on record, up almost 30% from August of last year. Remember, August is a seasonally quiet period anyway, so it's kind of a small benchmark to rally up against, but still just crazy time. The highest August in the history of OCC. So pretty much every month this year has been the highest, whatever month it is on record. That's just par for the course this year. Year to date, ADV 28.4, almost 28.5 million contracts. It's up nearly 50% from this time last year. So I've said it before. Be careful what you wish for higher options volume, because sometimes broader society has to suffer to get these numbers. Let's see. Overall, remember, OCC clears other stuff, not just options. Let's drill down a little bit. Total exchange-listed options volume, 611.7 million contracts. It's up about 30.5% from last August. Equity options, drilling down even farther. That was, 582.3 million contracts, up about 39% from last year. Let's drill down even farther to ETF options, 189.7 million contracts there. That's a 0.7% decrease. So ETF options actually down, and index options, get ready for this. Index options, 29.4 million contracts, almost 42% decrease from August of last year. So that kind of reflects where we are right now. SPX, I've said it before, still kind of in rough shape, having transitioned back to this kind of weird hybrid model that it's on right now. And futures volume, 4.2 million, 54.9% decrease. Remember, that's VIX futures pretty much. So VIX futures still have not recovered from the VIX Ocalypse, Volmageddon that took out XIV and everything else. We had Ariane Cricky from the CBOE on the network recently talking about the launch of mini VIX futures, undoubtedly intended to goose these numbers up a little bit. Obviously, they launched too late to really do that, but we'll see if that has any sort of meaningful impact on this. But right now, those futures, and indeed the index options, the two core franchises of the CBOE, are pretty much hurting. All right, I promised you earlier, it's a pop quiz. We teased you with a little bit of TSLA. You guys have been voting in there. This is a reason to listen live, listeners, because you're going to get the results right now. We can reveal them because by the time the podcast goes live, this flash poll, this pop quiz will be over. Tesla's at 411.25 right now, so it has dropped another, looks like a handle or so since we started talking about it. And let's see, as of the time we posted, well, before we get to that, before we get to the answer, let's see how you guys are voting right now. And in the hot and heavy, fast frenzy blush of voting here, we've got $1 to $3 at almost 30%, 29.6%. It's hard, it's all ticking. Actually, number one right now is $7 to $9. Our audience very precise with 33.3%. So exactly a third coming in at $7 to $9, followed by north of $9, where Uncle Mike and the Rock Lobster were leaning at 29.6%. Also 29.6%, so a tie for number two at $1 to $3. So maybe saner, more level-headed folks. In a normal world, in a normal underlying, you guys would probably be right. Not here, though, spoiler. And 6.5% for $3 to $6. No love there for some reason. It keeps ticking again, just ticked again. Now it's almost 39% for north of $9. So it's moving all over the place. But we also got Stadini chiming in the chat. He says north of $9 too. Well, if you guys voted north of $9, you are correct. As of the time we posted this poll, those puts were trading a whopping $10.40, Mr. Rock Lobster. You were correct. How's that make you feel? $10.40 for a 50% out of the money put with about 3 months to go.
I know this is hard for you to believe, but you know what I used to do for a living? Take a wild guess.
You used to wander the earth and train kung fu.
That was after.
No, that's me, Mark.
15 years. So I'm good at, actually, the only thing that means is I'm passively good at guessing every once in a while for options.
Once in a while. Uncle Mike, I had no idea you were such a kung fu master. We'll have to arrange some lessons here after the fact. Meanwhile, though, it's time for us to keep on rolling into our craziest segment. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, let's do it. Let's get weird. Let's get wild. There's been so much other stuff popping off. I haven't even looked at what our Eye of Sauron spit out for us today. So let's all look together, shall we? Let's kick it off here. Oh, this is a name we haven't talked about in quite some time here. This is Nokia. Remember, they used to be the big phone manufacturer. Even here in the U.S., everyone played Worm back on those old candy bar Nokia handsets. Not so much in the U.S. anymore. They're still out there doing their thing overseas. But here in the U.S., kind of hard to find a Nokia device. You really got to work for it out here. But nonetheless, ticker symbol NOK, N-O-K, trading right now $4.55, off about 1/4 point or nearly 5%. This is the name that's had a interesting year. A year ago, it was trading not that far from where it is right now, 487, and it kind of rallied up to a 52-week high of about 532 right before all the actually, I take that back. The high was actually back in October, and then it sold off pretty hard. Looks like they had a bad earnings in October of last year because they dropped from about 532 down to 355 in the span of a couple of sessions. So they got hit pretty hard. Then they kind of hovered there for a while. Then they started to rebound and make their recovery. Got up to about $4.50 right when all this madness popped off in mid-February. Then they sold off again. They got down to $2.34 there in the nadir in March. And then it quickly turned around. This one, not like a lot of our other names, they had some fits and starts post mid-March, and they rallied and sold off. This one looks like it never really looked back. Within a week or so, it was trading back north of $3. And by June 5th, it was trading $4.50 again. And then it topped out recently on August 4th at about $5.10, and kind of has been hovering there for a while until a recent sell-off here down to where we find it today for about $4.50 out here. So an interesting little story here for Nokia, selling off and then rallying hard again. So let's see what our Eye of Sauron found out here. And an interesting day. I wouldn't have guessed Nokia would be first on our radar. That's what makes it fun out here in the Eye of Sauron land. It's the NOK September 4.5 puts. So these are going out pretty soon. They're going out this month. 4.5 puts. These are in the money puts. Actually, they're at the money puts right now. And they're going up for 14 cents. These things were 12 cents at 14 cents when they went up. And someone came in, looks like on the SIBO, and said, I'll take all you got for 14 cents. And they got 11,782 of them. Worth noting, this did go up late, so maybe read into that a little bit with a grain of salt there in terms of the execution. That's interesting, because that's an interesting strike also for Mr. Rock Lobster's favorite line in the sand type trade. Worth noting, there are earnings, but not in this cycle. The next earnings are on October 29th, so this is not an earnings play. Mr. Rock Lobster, this is kind of a bit of a weird one. You know, 14 cents here on a late print. You might think it was buying to hedge this thing because it is at the money. It's a weird strike to come in to want to hedge right now at $4.50, but c'est la vie. That's also not a ton of money to get a line in the sand if you want to draw that line in the sand right now. But it is pretty sizable. Nonetheless, what are your thoughts here on this old school candy bar phone maker and some size puts here in Nokia, sir?
It very, very interesting. Very interesting as a trade, I have to say. I am thinking that you look at it, and I'm looking at all the action. I see a lot of single leg, buy. I think they just bought them. They bought these, and they bought the 5 puts as well. Huge volume, actually. almost over 25,000 contracts, way over the OI. I have to admit, a little bit, I don't think these are line in the sand puts. I think this is, I'm freaking out and I'm going to buy some Nokia puts. I don't, there was open interest on the 4s, but this is double that. Maybe they made a lot of money on the 4s and they're covering them. Possibility. I'd have to go back in time and sales on that bulge. But other than that, it just looks like somebody's buying them, and it does not look like it went up with stock as well.
It does not. It does have the whiff of buying and some sizable buy. If you had told me that the larger print we would see on our Eye of Sauron today would be a Nokia, I would have said, you're crazy. But hey, that's what makes it fun. That's why you got to tune into this segment. That's why the Eye of Sauron earns its big bucks out there in Funland. Let's go on now to our next name. This is a bunch of fun stuff here on the old Eye of Sauron. A lot of names you wouldn't expect, which makes it fun. Next up on our Eye of Sauron rotation, we've got Hilton Grand Vacations. Ticker symbol HGV, trading right now $22.45, off about 44 cents, nearly $2, nearly 2%. This is the name that a year ago was trading about 33 and a quarter, so a wee bit north of where it is right now. And it kind of sat there. These timeshare names usually kind of sleepy, not a heck of a lot of action in there, until, of course, the great nadir came upon us all in mid-February, and it sold off from about $32 down to 8 and a quarter. In mid-March. Obviously, no one going out and gobbling up the timeshares in all that madness. Then it rebounded pretty quick. It got up to, looks like, 1830 again, so rallied 10 handles by March 26th. Then it gave a lot of that back down to 13 and a half. So none of these ones that had these fits and starts. And then it topped out shortly thereafter. I don't even need to look at the chart to guess when it was. I'm going to guess June 8th. Oh, yes, I'm right. June 8th, 25.65 is where it topped out recently. And it hasn't really looked back since. So kind of continuing this trend of the names outside of the FANGs kind of seeing a little bit different market out there. They all rallied into June 8th and haven't really looked back. And this one, a similar thing. It sold off. It hit a peak of 25.65 on June 8th, and then it kind of sold off down to 18.65, and it's kind of been vacillating in this range ever since. And here we find ourselves about $22.50 right now. So let's see what our Eye of Sauron found. Actually, it's on the call side. You might think it would be puts today, but it's on the calls. It's the SEP 25 calls going up for 30 cents. These bad boys were 30 cents at 65. These calls went up on the bid 5,000 times over there on the Philly. This is another one that has earnings, but not until the 29th of October. So similar to our last name here. Mr. Rock Lobster, seems like someone is kind of near-term done with this name, and they'll say, hey, I'll dump it at 25 if I have to. That's pretty close to that June 8th high. And they'll take 30 cents to do it. Is that your read as well, sir?
Well, the simple answer is just yes. It looks like, we thought that the COVID, post-COVID, whatever is going to be grand and everything is going to be hunky-dory. And, maybe just take some money and call it a day. Talk about changing your expectations, right? You've been watching the stock, trying to bounce off the bottom. Is everybody going to take vacations again? You're like, oh, yeah, everybody's going to take vacations again. And the stock's going to go ripping and everything's going to be cool. And now you're like, the Fed just threw just the biggest wet blanket all over everything, wrecked everybody's life. And they're like, you know what? We're going to take our 30 cents. Forget about going for the home run. We're going to take our 30 cents and be happy. That's what it feels like.
Kind of hard to fault them. And 30 cents and a good run to 25 wouldn't be the worst thing for this name either. So tell you what, we'll come back to this bad boy. We'll come back to Nokia as well, just to see what the heck's going on in Candy Bar Phone Land before we head on into our final name here. This is a newcomer to the Odd Block. This is interesting names. And that's why we call it the Odd Block. Things get weird. This is Zuora Inc. Ticker symbol ZUO, Z-U-O, trading $10.95 off. Get this, 5 and a quarter, or about 33%. Not a good day for Zuora. This is an enterprise software company that creates and provides software for businesses to launch and manage their subscription-based services. That's a mouthful of a sentence. And let's see, they had earnings yesterday, and I'm going to go out on a limb and say they probably didn't go well. This is the name that a year ago was trading $14.39, so well north of where it is right now. And it kind of hovered in that 14 to 16 or so range until right before the big sell-off in February. Then it dropped down to 6.25 in mid-March, so not looking good. And then I guess subscription-based services started ticking back up because it started to get a bit of a run, made it up all the way to about $13.50. This one peaked a little bit later. It's not the June 8th peak. It's a June 17th peak, which is a little bit different. Haven't seen that on too many of our names. At about $13.50, and it sold off again down to about $11.50 until recently. Looks like leading into their earnings, they had a big run-up. They went from $11.50 all the way up to $16.17. And then they promptly gave it all back today, right back down to sub $11. So what do we have today? A massive sell-off? We've seen a put palooza or something out here in the weeklies or monthlies? No. We've got longer-term call paper, which is kind of interesting. In particular, the Jan 22 half calls going up for size today. A couple of blocks caught our attention. First, a block of 4,643 going up for 50 cents. They were 50 cents at 55 over there on the MIAX. And then also a block of 2,498 going up also for 50 cents. They were 50 cents at 55. Total of nearly 11,000 on the day have gone up. I'm trying to parse. Obviously, a lot of them went up in smaller chunks. Just trying to see how some of these blocks. Looks like that 50-cent bid might have been parked in there, Mr. Rock Lobster, and folks are just kind of just getting filled. Or let's see, 22 halves also were active. It's been in other months, but yeah, it looks like these are trading through the offer here of another 1,864 trading for 45.3 cents when they were offered at 35. So it does seem like someone, Mr. Rock Lobster, is probably inhaling these bad boys, in which case they're looking at a pretty aggressive return to form here for Zuora Inc. I mean, going from $11 to $22.50 by January. That's quite a bridge. I'll sell you that bridge and maybe a few others. Mr. Rock Lobster, do you think these are buying these, or do you think all this paper kind of obfuscates what they're up to and they're really maybe crushing that 50-cent bid, which I can probably get more behind?
This stock has had quite a run. Have you looked at the chart? Yeah,
it's all over the place.
It's crazy. It's crazy town. So what are they doing with these calls? Oh my gosh. It looks. I was looking at I'm looking at the way the paper traded. Does it feel like they were kind of selling these things? It feels like they just got a good price. They're like, okay, the stock is up like $10. Screw it. We're going to sell the calls. It just feels like they thought it was free money. They're the Jan 2021s. I just feel like that's kind of what, either they're an owner or something like that, and they're just like, these things are 50 cents. It's like free money. If we get taken out up there, we're going to make a fortune. So it felt like kind of more like sort of like that type of trade.
Maybe, but it seemed like someone parked that 50-cent bid because it didn't really move and it kept getting hit. 4,600 times, 2,500. So someone parked the 50-cent bid in there for size. They wanted these things. Because you think that bid would move at least a nickel if someone's hitting it for 7,000 contracts.
Okay, now here's the best part, though. Where do you think they are today?
Oh, with the stock off, what, 33%? Let's go crazy Tesla town, north of $9.
I was a little surprised on it. They still have a 30-cent bid.
I was going to say about 25 to 28 cents. 30 cents. Wow. That's rich.
Yep. So they haven't gotten them back yet. And I guess we'll see what happens, but it feels like a bunch of options that are just going to collapse slowly but surely.
Here you go, listeners. If you like covered call candidates, there you go. You get 30 cents still, and you get a 50% rally in the stock. If you like this name, go figure. We're going to watch this one. I'm coming back to this one because this one is these are all kind of interesting chin scratchers today, listeners. Zuora Inc. 30 cents for 50% out of the money calls, $9 plus for 50% out of the money puts in Tesla, dogs and cats living together, mass hysteria. Let's see if you guys can talk us off the ledge. It is time for the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, a lot of people had thoughts on our Tesla flash poll here. I mentioned Stadini in the chat. We got our Chappie. I like that name. Chiming in saying Tesla's got over 3 months to go. The puts have over 3 months to go, and the stock was trading down there just over 2 months ago. They should be priced well above $10, in my opinion. Not sure who would want to sell that. Well, you were correct. They were $10.40 the last I checked out there. Let's see. By the way, it's like north of $9 is now winning firmly 40.5%. So word must have leaked out that I gave the answer. But still, you are correct, our Chappie. They were north of $10. Mr. Rocklops, looks like you got into a little Twitter discussion about straddles. And some quants trying to define what a straddle. I love when people try to attribute all these other definitions to things that are tradable instruments at the end of the day. The straddle is a tradable instrument. So what is it at the end of the day? It's the call and the put added together on the at-the-money strike, because that's what the market is giving you. If you try to shoehorn in all these other mathematical definitions, what do they say? It was the average or the standard deviation, something along those lines. If you go calculate all those numbers and try to compare them to the straddle, I guarantee you it's not going to line up, because the straddle is a tradable instrument. It's what the market is giving you. It's what supply and demand you flex at that very moment. And that's what a straddle is. So if you get beyond that and trying to shoehorn it into your models, you're going to go astray. And Mr. Rockloff, it seems like you got into a discussion about these, saying the straddle holds the known info, and trading is to decide if it is right. I learned that from the Trading Yoda 30 years ago. I must know, A, who this Trading Yoda is, and B, I like our buddy Mr. Lincoln, who replied to you, and he gave you a nice Baby Yoda GIF, which is always fun. It's worth it just for the Baby Yoda. So, Mr. Rocklobster, who is this Trading Yoda, sir?
I wish all my comments elicited a Baby Yoda GIF. And you know for sure that is not the case.
That would be the world would be a better place if that was the case, sir.
Exactly. How much vitriol has been pointed at me, even though, as we know, I have been right much more often than I am wrong. That one of the founders of Group One Limited, it's probably the fourth biggest option market making firm. That's where I cut my teeth, in 1989 when I started there. So that's what.
Did they have puts in 1989? Or were you only doing calls?
they had puts, and they actually started using computers. They were just starting.
You were the first class to graduate from the abacus?
Yes. So just so everybody kind of knows how high technology at the time was like a Mac. Was a Mac. And having a Mac on the floor generating sheets that I used to run, 200-300 sheets, after the close. I think I had 3 jobs back then in those days. Just running sheets in the close and giving everybody theoretical values. It used to take about 10 seconds to run one Black-Scholes iteration for a sheet, which of course now you open up your TOS platform, you say, oh, this thing sucks, right? But back then there was no way that thing could have ran the way it runs right now. So way back when, and that was Trading Yoda. He's like, hey, just get a handle on the vol and you'll be able to price everything. And I swear I learned that early, and it was probably the best piece of option trading advice I ever got, because it's provided me with a lovely living since. So I got no complaints from Trading Yoda.
Except the north of $10 Tesla puts. I think you have some complaints about those. Teach a Man to Fish had some complaints. Not about you, Mr. Rocklobster, about Marriott delisting from the Chicago Stock Exchange. He took umbrage to this. He said, another nail in the coffin of the once great Chicago exchanges. Meanwhile, Chicago's mayor doesn't even know that they exist and have been the city's revenue driver for years. With the flip of a switch, they'll be gone. Well, I don't know if I would lump Chicago Stock Exchange in with the other Chicago Big Three as the great Chicago exchanges. Even here, I traded options for years here on the CBOE, and I barely knew. And it was a bridge over from the Chicago Stock Exchange. I never went over there. I barely knew it existed. It was, I think to put it favorably, a small regional stock exchange. A lot of the paper that went up there, let's face it, was hedging paper for the market makers on the CBOE. You put up an option trade, you had to hedge it with stock, you would match it up, maybe in Chicago, maybe on the Cincy. Remember the old Cincy exchange, Mr. Rocklop? So that's another place where you would match up stock. Like, that's why these places really existed. But yeah, it was a Chicago institution, and you're right, it is sad to see other ones going the way. It's now, by the way, I think the NYSE Chicago Stock Exchange, which is all sorts of wrong. That's a conversation for another day. Also, probably worth noting that, yeah, Chicago, for the inherent trading history that is built into the city leaders and city founders and others, and just in general, have very little cognizance of how important this industry is to this city. People who come from outside of Chicago are often surprised by that, but I've been here for a while now, and I'm not. That's why I had that group, the Options Alliance, try to foster a little bit more community support for this industry, because you're right, it is the bedrock of this city, and it has driven, and it exists really to this extent only here in Chicago. This is effectively the Silicon Valley for derivatives here. It's here and nowhere else. And you're right. If they don't take account of that, it could be going the way of the dodo. So interesting comment there. Teach a man to fish. I have a lot to say on that, but we'll move on to another topic here for now. J4340. This guy has chimed in before. I believe he's our food guru. Mr. Uncle Mike, you like this one? He was responding, I believe, to our flash poll on our last episode where we talked about the heated debate of Pamela Anderson and Baywatch versus Knight Rider. Which I'm blanking on his name now. Which Hasselhoff show did you prefer? He chimed in and said, Knight Rider for sure. Kit got me into F-bodies when I was a kid. I'm on Mr. Uncle Mike. You know what an F-body is? You built the kit out there. What do you think of that?
I gotta be honest. F-bodies are a little bit beyond my scope. I guess I yield to the listener's expertise on this one.
I guess he didn't build the same model kit that you did there, but your listeners all agreed. Kit and Knight Rider won the day out there, listeners. And now it's time for us to tell you what's winning our day, at least for the rest of the week. A lot's popping off here. Let's get to it as we go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, where do we stand now here coming into the latter portion of the show? Well, S&P off about 3.4%, so getting a little bit back there. Not a ton, but a little. We've got the Dow off about 2.7%, and we've got the NASDAQ off a little bit shy of 4.75%. So that has ticked down as well. It was at 4.99%. Kicking off the show. Let's see where our old friend VIX is hanging his hat. It's at about 32.5 out there right now. So VIX cash still feeling frosty, still feeling frothy out there. Let's go around the horn and see what everyone else is paying attention to. Mr. Uncle Mike, we'll start with you, sir. What is on your radar for the rest of this non-Uncle Mike week, sir?
How do you know it's not Uncle Mike week? We could be at 370 tomorrow in SPY. We have non-farm coming out tomorrow, which can be a market mover, so you never know with what's happening with things. So definitely watching that around 7:30 a.m. Chicago time, like I like to do. So watching that. Also watching just to see how the market reacts to this pullback, because if you look at a longer-term chart, we're really not off trend even a little bit compared to how much the market's been going higher. So watching that, watching politics, and still once again to reiterate, Knight Rider is definitely better than Baywatch. For another reason, my wife is 10 times more attractive than Pamela Anderson anyway. She's got nothing on my wife.
Whoa, fighting words there. I like it. Man, I won't even go there. Well said, Mr. Uncle Mike, sir. Always keep the wife happy at home, a key to a long and successful and indeed happy life. Mr. Rock Lobster, I know you took umbrage at Baywatch getting knocked off by our audience, but at the end of the day, our audience dictates what is truth, sir, and they have chosen Knight Rider above Baywatch. If you have any other thoughts on that, have at it. And also, what else are you watching for the rest of this blood red week, sir?
There's not much I can really say after TOSAW invokes the wife passage on Baywatch, Knight Rider, the whole. I'm going to concede. Sometimes you just got to know when to fold your cards and bow out gracefully. So
I dealt a low card with that one, didn't I?
He did. He's like, yeah, I'm going to, he wanted to declare victory and put a stamp on it right at the same time. what am I watching? Well, what are we watching this week? All of a sudden, what we were watching all go straight up is now, like TOSAW said, this is barely below a trend line. It's just like a little blipsicle today. When we really only had 3 or 4 down days in a month on quite relentless buying. So, things have to eventually. I think it's better that they do sell off a little bit. And we're barely where we started at the beginning of the week. We started at 350, and we're down a little bit below there. But ultimately, let's see what happens. I would say one thing for everybody to watch is that future was predicting that OCC future was a 35 VIX. And you see it now, and you're like, okay, well, 35 VIX, where is it now? Okay, so this was yesterday. Okay, now that contract is 36.83. So so for perspective on this moment, I think there's opportunity in September and some other things. That's a separate idea, but we had a 35 cash almost, or a 34 cash yesterday. The futures only have $2, $2.50. I think barely, maybe 1.5 from this morning, and the market really wasn't doing very much, even though VIX is up 5. So that future being up there, usually when that premium is crazy high, there's a reason for it. And let's see if it continues, but it's pretty much the future absorbed this entire move. The thing that's interesting now, I think, again, in Option Pit, we'll be covering this, but the SEP contract now is because will VIX cash hold this level? Because if things kind of settle down a little bit, where are we at SEP settle? So keep an eye on those two. There's almost a tale of two VIXs here. They are connected by, the time value and, time spreads and forward value. So another topic, but just keep an eye on that SEP, keep an eye on the OCC and see if it separates again, which I think would make kind of an interesting time spread right now, although you have to be careful with VIX, but I am seeing some kind of opportunity here, and I hope after I finish my session with my client that I'll be able to do something here. But just keep an eye on those two things. October was ready for this. It absorbed the entire cash move with almost no move. So we'll see. In order for this sell-off is real, you want to see that punch higher. That's all I'm going to say.
You want to see that punch higher indeed. Unfortunately, that music means we've come to the end of at least this epic journey, but don't worry, stay tuned. A lot more coming up. If you like vol, if you like all things equities, we got a lot coming up on TWIFO for you to like. The micro options just launched over there in CME land. The upcoming wires CME getting into the NASDAQ volatility / VIX competitor space. Crypto going to be on there. A whole bunch more to talk about in a little bit on TWIFO. Russell 2000, what the hell's going on there from a vol perspective? Spoiler alert, a lot. But before we get to that, let's go around the horn. Let's start with Uncle Mike, sir. If folks want to reach out to you, where should they go? What should they do?
stcharleswealth.com. We can talk Knight Rider. We can talk hedging. We can talk options. We can talk financial planning. stcharleswealth.com. All my information is on the site.
There you go. Check them out, stcharleswealth.com. Mr. Uncle Mike, I should say, Mr. Rock Lobster. Same question for you. Once you get done with your client, if more clients want to become your clients, where should they go? What should they do?
They should go to optionpit.com /memberships. See all the goodies we have, and we have a ton of goodies. Like the products Mark and I are running are doing very well. So, come and check out. So try to, sort of earn while you learn. See how all these things happen, how vol works, how to create a trade out of it, and listen to us talk every week. If you like this show, you're going to like Option Pit even better.
Whoa, them's fighting words, sir. Nothing is better. It may be on a notch or two below, still enjoyable, but better is a whole other ball of wax. So we won't go there today. But you can check them out for yourselves, optionpit.com. And since Mr. Uncle Mike invoked wives, allow me to take this moment to wish my wife a happy birthday out there as well. A celebratory day even in this coronavirus pandemic. And on behalf of the Uncle-list of Mikes and the Rocking List of Lobsters, and indeed myself, I thank all of you out there for downloading, streaming, subscribing, for sending in your questions, for listening live, for voting in our polls, all the fun stuff that you do. If you need a little more in your ear holes on a day like today, who doesn't? Stay tuned. We'll pump some fun stuff in the live. We'll be back in exactly half an hour to talk all things equity vol again, because there's more to talk about, and a bunch of other fun stuff on TWIFO.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.